The echoes of 1970s oil crisis are returning as the Hormuz closure threatens a global stagflation trap. The new data suggests the solution isn't subsidizing petrol, which only drains national treasury, but accelerating the shift to renewable. Solar and wind capacity installed just last year now generate double the electricity potential of the LNG passing through the strait. This isn't just an environmental choice, it's a fiscal shield against energy-driven inflation. For more on this, we have been joined by climate activist Zain Haq. Zain, thank you so much for joining us. Is this a real turning point away from the fossil fuel? How should the government act now?
I think in these moments it's important to learn from history. A lot of what we're seeing now has already happened before. So in the 1970s, we had the major stagflation crisis, which was different from the Great Depression in that instead of a deflation and a demand side problem, there were supply side shocks due to the oil shocks of the 1970s. In fact, that's what led to Britain basically having to go to the IMF for the biggest loan at the time, which was a humiliating thing for the UK. And that's because at the time you couldn't shift away from fossil fuels and oil. So the oil shocks were driving up production costs, which was leading to high inflation and high unemployment and slow economic growth. So that's what they call stagflation. And as a result, they actually couldn't deal with that through government intervention and putting money into the economy, which they could have done during the Great Depression. What's different today is that we are no longer as dependent on fossil fuels. If the Strait of Hormuz closure had happened even 20 years ago, it would have been a greater problem for us. And when the oil shocks happened in the 1970s, it led to early research and development for moving away from fossil fuels and into solar energy. But this time around, these shocks are not going to lead to more R&D, but instead actual transition. So we know that just in the month of March, total global generation of energy has already declined in terms of fossil fuel use. It's already declined by 1%. And the use of solar and renewables has actually increased. And when we look at places like South Asia, Pakistan, and countries that are not oil rich, this is a golden opportunity for these countries to become more self-sufficient, especially countries like Pakistan that have nuclear energy, solar energy, hydro energy. Countries like this have nothing to lose if they switch towards renewables at this time. Because if we don't, then we're going to continue to have more inflation. And especially, I think the biggest mistake in these circumstances, and it's very tempting, is for the government to make an intervention and have subsidies for fossil fuels, have subsidies for petrol, for gas, for motorcycles. But that's a major error, because what that does in a stagflation crisis is that can lead to higher inflation in the long run. What that can lead to is a higher demand in the country's imports, and as a result, it can lead to a fall in the country's foreign reserves, and as a result, it can lead to a collapse of the currency and hyperinflation. And that's what would have happened in the UK in the 1970s had they actually intervened in the way that many people in government at the time wanted to. So I think the major takeaway right now is that this is the perfect opportunity for a lot of countries that are not oil rich to move away from being dependent on other countries for their energy.
Thank you so much, Zain, for joining us and giving us such deep analysis of it. Thank you so much.